Hello, everybody. My name is Stephen Mead here with Domicile Real Estate for people who love houses. This is our Southern California housing market update for October 6th, 2020. Again, you probably heard me say this 1,000 times, but for us, Southern California, we run our proprietary stats on Los Angeles and Orange counties. We try to get an idea of where the market is going, and where it might be heading into the future, kind of tell you what's happening so that you can make better choices. And, one of the things that strikes me as I'm sitting here in October, this is our first whole market update for October. And I'm thinking of just what a crazy, unusual year this has been. I don't think anybody could have really predicted the sort of market that we're in. I don't think anybody saw this coming. And as we look at sort of the results, I know I'm continually sort of surprised by some of the things we're seeing. I think I put the question here, it's not clickbait. Have we finally hit sort of a pricing plateau? And, one of the things that I think you understand in markets, if you've been involved in economics, is that a lot of times you have sort of a shift in a market and then there's another response to that. So for example, if I told you that gas prices were going to double tomorrow, like the taxes on gases will double, you might predict that the market response would be that sales of SUVs would go down and sales of hybrids would go up, right? So, whenever we see ourselves in sort of a rising market in terms of prices, that's really a response to something happening. So when you kind of look back and you think about this year, and I was just having this conversation, with a new home sales representative. And basically the conversation went like this: is we all sort of universally agreed that prices jumped 10% this year and nobody was expecting that. And, I think a big part of that was actually, I think the interest rates are playing a huge role in that. And I'll get into that later when we go through our affordability side. I have some more comments, but let's get started and take a look where we are definitely in fall. I think what we would call a fall market. But what does that really mean, and how is that affecting our supply and demand? So I'm going to bring on here. We are going to go ahead and, oh, that's interesting. Where is my, oh, there it is. All right, let me bring this up real quick and we will go through these. So, all right, so what I want to do here is look at our new listings, right? So this is really the supply in the market, right? This is the number of people that have put their home into the MLS in the last week, both under $1 million new listings and $1 to $2 million. And if you look here, you notice something interesting. Both of these categories are down. And in fact, not only is the under 1 million down since last week, it's really down since all the way over here in this light green area. I mean, this is a good 2 months back. So we're at a low point of 2 months of new listings. And, one of the things that I've talked continually about is that I expected there to be sort of this swell of new listings that would finally come because people see what prices their neighbors are getting. And it really just hasn't happened. It's never materialized. And now it looks like we actually are entering into what would be a traditional fall market where there are fewer listings coming onto the market, which is what you see here. Just in terms of numbers, this is a few from our peak point. This is a few hundred listings that didn't come up last week across LA and Orange County under $1 million. The effects are a little bit more subtle in this 1 to 2 million, and you can kind of see that these numbers as a whole are a bit more stable. It's just a smaller market. I think this point is really illustrated when we take a look versus this time last year. Now, for about the last month or so, these charts, we've had a lot more new listings in 2020 than in 2019. But look how this gap has narrowed. This is only 53 more than last year. I mean, this is almost essentially, it's within 10%. We can really call this, actually it's not even within 10%. It's within, it is fewer than 5% difference. So, for all intents and purposes, we pretty much can say we have the same number of listings as last year, really. It's almost the same number. And this kind of comprises our supply side. But when you really want to understand these market dynamics and why it is the way it is out there, take a look at what happens when we go ahead and we look at the demand side, right? Like the number of buyers that are out there. And we basically take the same measurement. So instead of looking at all the new listings that were put into the MLS last week, we look at all of the homes that went into escrow, the contracts that were signed in the last week. If we do that, we've seen that number is eased off too a little bit. So, what this is telling me is it's fall, but this number hasn't eased off quite as much as the new listings have eased off. And that kind of describes sort of our market situation as a whole, right? The buyer side is just not as soft as the side for sellers. I mean, sellers are like, maybe we'll put our house on the market, maybe we won't. Buyers are like, we want a house. And, I think really when you think about it, that makes a lot of sense, right? Because, buyers really have a unique opportunity in a market like this. But sellers, they're going to get a lot for their house, but they also have to still go and they have to go into that market and buy another house, right? And I think they're acutely aware of that buy side, that it's going to be difficult. And I actually think that's keeping a lot of sellers from putting their houses on the market. So if we go and we compare to last year, we kind of see a little bit of a different story though, right? Going back here, we said it does not look like the new escrows have dropped as much as the new sales. And when we go back through and we look, that's pretty clear. I mean, this is definitely, we have a good amount. This is over 100 higher than we were last year. So not 50 different, 100. And that really is telling you what's going on in this market. So if you're looking around saying, why does it feel like there just aren't that many houses? Why do we not have that much inventory? Well, this is why. Our buyers are letting up a little bit, but they're not letting up as much as the sellers are. Sellers are not wanting to put their house on the market, and the buyers are still out there trying to buy houses. So if we look at our absorption rate, that really puts these two statistics together. We're trying to measure this relative demand, and look what has happened. We have seen that absorption rate bump. This is looking like sort of it's not quite our sort of high point here, but it's well into the 80s. This is very, very firmly a seller's market. And that means that you are, if you're a buyer out there, you're really not calling the shots on the terms. Last week, we talked about something that I thought was really interesting, and that was our average list price, pending list price. And what's interesting here is there just hasn't been. This is what leads me to believe that we might be entering a little bit of a price plateau, and I'm going to tell you why I think that might be happening. So let me go off the share here for a second. You might be thinking to yourself, why is it possible that we have demand outstripping supply, right? We have these high absorption rates. We have low interest rates. Why is a reason that prices would stall out? And, kind of one of the explanations that keeps coming to my mind is I think we have a very warped view when we just look at prices and we don't look at payments. When we just look at prices, this has been a blockbuster year for homes, right? Prices are up 10%. We were in a pandemic and prices have gone up. It doesn't even sound like it could be true when you say it out loud, but it is true. And I would actually contend that prices haven't really gone up. And I think that is it. I think a lot of this pricing that we are seeing in the market, these price increases are a response to low interest rates. And that's really what you're seeing is they are a response to low interest rates. I think some of it is a lack of availability, but that lack of availability has been true all summer long. Rates did a little bit of a march downward this year. I think that we might be hitting a point. And if you look at this chart here, I'm going to bring it back up. You can really see why. I started to mention this last week, but you see this huge increase. And remember, this is our pending list price. So this is delayed by over a month from our closing prices. And if you look here, yeah, I mean, things shot up and then they've kind of fizzled out a little bit. And I really think that's what's happening is our prices have adjusted due to interest rates and demand levels, and now they are settling into kind of a new equilibrium price point. So that would mean for prices to go up further, rates really would need to drop. We need to see natural inflation. We need to see availability and inventory drop, which actually is happening to some degree. So I think we're going to still see some price appreciation, just not this sort of 10% gigantic jump that we had. So if we look at our list to close ratio for our under $1 million properties, again, that really sort of tells this story. Sellers are not coming off of these list prices. We're not seeing things traded at 99% like we did back in May, June. I mean, these things have kind of shot up, and this is kind of where they're staying. It is still very much an active market. If we look at our price on our over 1 million, our 1 to 2 million, that took a dive and shot back up. You see a much gentler trend line if you follow this. Still rising. You could maybe make the argument that it's fizzled out a little bit too. I don't really think there's quite enough data. This one jumps around a lot just because we have fewer data points. But if you look at another corroborating piece of evidence, right, on where we are, you look at this days on market for new escrows. This has been a very steady number. It dropped, and for the last 2 months or so, we've just been hovering in this high 20-day mark for under 1 million. Similar story over here in $1 to $2 million. And then we have this chart again where we track our payment on a median priced home. I think this one really does tell the story of our market. This has been a fairly constant number since March or May. And remember, this one is based on median sales price. So that means this statistic is actually delayed by months. I mean, really, we can say from April through now, that payment has remained fairly constant. And I think that's what you're seeing is you're seeing a market that is incredibly reactive to the price per month to pay for a house. And I think if you look at what changes that price per month, that's sort of, if you've got you have three elements of that equation, right? It is interest rate times sale price essentially equals payment. If you change any one of those figures, you're going to see the other two potentially change. Or if you change any two of those inputs, the third item has to change. And I think that's exactly what's going on in this market is our market has done a pretty good reaction. We're still low on inventory. I think we're still going to see rising prices. I just don't think we're going to see that double-digit jump like we had earlier in the year. I think things have definitely flattened out. And, I'm going to do something I absolutely hate doing, and that is talk a little bit about an anecdotal situation. I work out in the field. We're out there representing buyers and sellers all the time. And, we have an interesting situation for a home that's for sale where the market is a very tight inventory market, and yet the house has not gotten a flurry of showings. It looks great. It shows like a model home, but we're finding that all of a sudden buyers are a bit more cautious, and the people that we are getting way fewer showings, but they are more serious buyers. And I think we're starting to see a little bit of a shift that there might be buyers out there who only look at 5 houses and that's their total home search. And that's just a very different sort of buying type market than maybe we've seen. I think in the past, people just tossed out offers on everything. And while they still are tossing out offers, I think the buyers are being a little bit more careful. They're saying, if I'm going to pay these higher prices, I want it to be for something that I really want, and I'm comfortable waiting a little while. Only time will tell whether that's a smart strategy. Interest rates can change in a second, and I do think, you will see there's room for those payments to go up a little bit and absorb interest rate increases. I think if interest rates go up, I don't see prices slipping wholesale. I see the number of transactions going down instead. Fewer buyers and fewer sellers. Anyhow, thanks so much for joining us this week. If you like this podcast or if you like this video and you are a first-time home buyer, we have a specific first-time home buyer market update that airs on Fridays. Check out our YouTube channel. It's Domicile Real Estate on YouTube. Also, please like and subscribe if you're seeing this on YouTube. We love questions, and if you're in the Southern California area, we would also love to work with you on your real estate needs. Anyhow, thanks so much for watching. We will see you later on the week with our first-time home buyer update, and next week for another Southern California whole market housing market update. We'll see you soon.